lower the price. If not, you cannot sell. What's I want? This is Kenny here from Property Stories. So I think recently you all will know that Bank Negara actually came up with new guidelines to actually curb this refinance and cash out. So cash out portion now will have tenure of 10 years, not like last time 35 years. From what I understand from those in banking industry, correct me if I'm wrong, actually this guideline has been around since 2011, so it's not new. But what the central bank actually did was to make it clear. The wording is clear. Last time, right, when they first introduced this 10 years, we will know it as a 10-year stress test. Okay, 10-year stress test meaning that once your DSR passed for cash out portion 10 years, the offer letter, the one that come out offer letter for you to sign, that will become 35 years or up to age of 70. Okay, now the current one, it will become 10 years. So what does this mean? Actually, let me show you with this image on the screen right now. The image on the screen right now you are seeing actually is the loan amount is 500,000, which 300,000 outstanding and 200,000 is the cash out portion. Previously, this is how the calculation will sound. So I'm assuming on a rate of 4%. The cash out portion will be calculated based on also the interest rate of personal loan. So to illustrate what I mean, you can look at the screen right now. It's a loan of 500,000. So this, assuming this applicant want to cash out 200,000. Balance is 300,000, cash out portion 200,000. So previously, when they cash out, you need to calculate two parts, right? First is outstanding balance. I'm assuming the interest is at 4%, then the loan tenure is the maximum 35 years. So 300,000 interest at 4%, 35 years, you'll get a monthly repayment, you put in calculator, of 1329 per month. Okay? So for the cash out portion, the banks, right, they are not stupid lah. So they will try to circumvent as much as they can, or try to, wiggle lah. Because if the cash out portion is also limited at 10 years, back in 2011 I think, the banks will lose a lot of business frankly speaking. So what the banks did was that they tell, okay, Bank Negara, we will enforce this. Okay, so since you want financial responsibility, we will enforce this, but we will do it this way. How about we do it this way? Cash out portion, we purposely take the interest rate of personal loan, which is about 6 to 7%. This is very high. Okay, so once if they pass already, you say 10 years your cash out portion must be 10 years it's not like upon the LO issuance, so it just say it must be 10 years So now I give you 10 years So but 10 years, if the applicant pass, I can show you the applicant pass, I extend to 35 years Okay, refinancing cash out. So that is exactly what the bank did. So you can see the calculation, right? If 200,000 cash out based on interest rate of 7% for 10 years, the monthly repayment is a staggering 2,323 ringgit a month. Means 2323 a month. Okay? So imagine this now. So let's just say you pass already, you pass the stress test. That is the 10-year DSR stress test. That's the previous. Okay? So if you pass this one, that cash out portion will follow the housing loan tenure, which is 35 years. Your installment right now, ladies and gentlemen, based on this 35 years at 4% rate, remember you follow the housing loan installment, interest rate, is a very low 886 only a month. Okay, imagine 2,000 plus a month to 800 a month, 800 plus a month. Okay, how low is that? It's less than half, So why not people actually refinance and cash out a lot? That's the reason. Okay, so that is the previous one. So now we go to the current one. What is the current happening in the market? So Bank Negara say, okay, guys, I think all the banks, I think you guys have fun already. You've already be accepted and you guys have fun. So now what I'm going to do is I'm going to put it very clear. Okay, so now very clear, in the loan offer letter you must state 10 years for a cash out portion. So the facility you will see, one is 35 years, one is 10 years. So now the calculation will look like this. Okay, before, again, we go back to the image, balance 300,000, interest rate 4%, 35 years. The repayment, monthly repayment is 1,329 a month, 1,329 a month. Okay, so now the cash out portion. So they tell the bank, Gara, since you insist like cash out is also 10 years, it's only fair that we use the housing loan interest rate, not the previous personal loan interest rate, to calculate. So we use the housing loan interest rate, the same housing loan interest rate, we will get at 200,000, interest rate is 4%, 10 years. The repayment now is 2,025, 2,025 a month. Imagine that previously 900, now become 2,000. Okay, so your new offer letter will reflect these two payments, 1,329 and 2,025 a month. Okay, so imagine this, how much you actually need to top up extra a month if you refinance. So to sum up, you can look at the screen right now. I've already put everything up for you, the comparison between the previous and the current state of affairs. Okay, current state of refinance. You can just pause this and take it out. Okay, done. So let's move on. I'm sure you all would like to know, right, what's the implication to the housing market, to the real estate market, once Bank Negara implement this. So we can see from the previous table, the higher installment. What does it mean? The higher installment means the DSR, or the person that refinance, will be higher. So it actually deters the investors, the serial refinancers especially, we call them. The property price keep on going up, they refinance, keep on going up, they refinance. Then they get more cash out, more cash from these properties to invest in more properties. Okay, so now when they want to do this, right, they need to think, first, how can their property actually cover a 3,000 rental a month? Not many can, I can tell you. Last time, previously, because of the tenure is still 35 years for both facilities, it's still worth it because you follow the housing loan rate. Now they split two kinds of installments. Your rental may be 2,500, but as you can see from the table, you might be paying the bank 3,300, which is not worth it to refinance. Okay, in most cases, not say all. So you will deter a lot of investors from refinancing. Secondly, for those who want to raise capital for this, you just started, just want to invest or want to buy a second house, it also will deter you, because the legal fees legal and valuation fees is not going to drop. It's going to be the same. Your GSR is going to increase. So let's just say you take out today, you want to buy property. Last time after you refinance, you might be able to buy a 1 million ringgit property. But right now, let's just say after refinance, your DSR increase, so the property price you can buy, you are eligible for also drop. Example, 500,000. So you will rethink whether it's worth it for you to refinance or not. So what I'm saying here, the bottom line is that you will be higher in installment, higher DSR. You will lower your loan eligibility. That means you will lower how much you can borrow. Okay, once you lower how much you can borrow, what will happen next? Remember, I say that the price of property that you can afford to borrow, to buy, is also going to be lower, right? So once this thing happen, what's going to happen next? The demand will drop. That's it. So for property owners out there, if you hold property, especially those properties that's very hot for investment one, I foresee this is mostly is going to affect this property that's very hot for investment. People usually refinance is to invest one, invest or as a working capital for their business. Basically, it's invest lah. I seldom see frankly speaking, people refinance to buy another dream home. Usually what they do is they sell. Or if they refinance also, it's because they suddenly found a dream home, then they cannot wait. So they have to put an offer, so they refinance in the haste. Okay? That one I've seen before. But usually, when I meet refinancers, these are serial investors. These are very good investors. Okay? So next, after this, the property price that this investor can purchase actually drop, what will happen? Demand will drop, right? Because the property price now can buy cheap. Instead of 1 million, can only buy 500,000. So you can't be looking at property that's worth 1 million anymore. Demand for it will drop. And you, as a landlord or landowner, or property owner who wants to sell, especially if your property is an investment type of property, very popular for investment, you also need to lower your asking price. Because now, your buyer want to buy but cannot afford. The bank don't want to borrow. So, lower the price. You know you cannot sell. Correct? So, in general, I want you all to understand, right, the relationship between the bank and real estate, the banking sector and real estate. You cannot separate them. Behind all this, right, is the big brother. Never offend the big brother. Never underestimate the big brother. Who is the big brother? The government. Okay? Whatever happens in the market, real estate, banking, your property price up or down, demand up or down, government. It's a very, very important factor. So the next time when you listen to any policy changes, doesn't matter whether it's from the government, from the bank, or for the development, remember this, it all is connected. So in this case, right, the government wants to curb the investors, basically taking out cash money and then have a free flow of money out there. So that's what they do. So they just work together with the central bank, say, central bank, hello, maybe our market is a bit too hot. Could you come up with something? So the central bank come up with this. Tighten, we look at the guidelines, maybe you can tighten the screws on this. That's what happened. Okay? So the price will drop. When this price drop, right, it's not just the sub-sale market that is affected. Remember the developers. Developers have been selling, you all have been selling crazy prices, right? Giving big discounts. I know it's not all, okay? I'm just saying some of you have been overpricing your properties for years and then giving cashback, 30% cashback, 40% cashback, 200,000-300,000 cashback to your to your buyers. Now you try, okay? With these kind of things happening, you are supposed to lower your price. Okay? You are lowering your price to reflect the more of the market right now. Okay? Yeah, I know not many investors out there. Frankly speaking, most of them are first-time home buyers. Okay, but this is hopefully is a wake-up call for you to actually correct the price. Okay, for those who are actually overpricing it for years and giving some bullshit like we are giving you like cashback, we are giving you some shitty facilities, some shitty packages, some fully furnished deals. Last time we sell 500,000. Now we need to sell 1 million because of this. You need to be more realistic for those who are pricing like this. So in this kind of market, right, you might be asking yourself, who are the winners? There is, of course, in every market there is someone who will be winning more than someone else, okay, another party. But one party that I always like and I always mention in this channel that will win no matter where the market goes, up, down, left, right, or even stagnant, is the real estate services. The biggest of them all, real estate agents such as myself. Okay? Well, as long as there's transaction, we'll still earn money, right? It doesn't matter where the market goes or stays stagnant. Okay? So, my message to you all, if you are a real estate agent or you just started, right, work harder. Work harder, find more listing. Try to go out of your focus area. Because, frankly speaking, if this kind were to happen, what will happen next, right, is that you all might actually meet some motivated sellers. You all will meet some really motivated sellers, and then that is really a good deal. And you will have investors for it. That time, actually, you will make a killing. But right now, you have to start looking for it. Okay? You have to know the market and start looking for it. You have to know the appreciations, you have to know the potential rental rate that there, and then you start looking for it. Because I can tell you, it will happen. In these kind of cases, at least it will happen. Slowly but surely. You will also be meeting a lot of those developers that are desperate to let go their stocks, like I mentioned just now. You can talk to them. Sell for them, why not? Huh? So you can also make your money there. Everybody is looking for buyers right now. So real estate agents work harder, work smarter actually, not work harder lah, work smarter. Understand the market, study the market, and definitely you'll be able to find a lot of good deals out there. Okay? The next people that will actually make a lot of money, from my point of view, are people like those renovation companies, anything to do with real estate, handyman, wireman, all this, they will still make money no matter what your property name maintenance one. These are evergreen business. I always like this evergreen business. Say plumbing, wiring, wow. I was looking for a electrician for a shop lot. Until now also cannot, very hard to find. Electrician, a qualified electrician for a shop lot. You know how hard to find, and then what's the cost? Wow, a lot, man. This all will win one, this business. That's it for me. I hope that this update actually gives you a little bit idea of what to do. I'm not trying to scare you here, okay? I'm not trying to incite fear or anything. I want to try to get you to think, okay? How can I make money from this? That's what you should be thinking of. So this is Kenny here from Property Stories, and I'll see you again next video. Bye-bye.